Good evening. Welcome to end of day review for today, Friday, July 21st, 2023. Before we go to detail of the price action today, I just want us to go back to Monday end of day review from 1 hour time frame. Right, on Monday we draw this scenario because we saw the buy side liquidity was taken, and in our experience or our database we can only think of short the market gonna go down because buy side liquidity was taken. However, on Tuesday, the market showed us there a second scenario, which is it keep going up and take more buy side liquidity. The reason for that we don't know, but from the liquidity standpoint, we strongly believe that so many short appear. That's the reason why the market keep going up, because so many buy side liquidity appear. So you need to go up and check it. Let's take a look at the hold on. Let's take a look at a weekly or monthly. We can see that a lot of liquidity buy side up there. That's why it keep going up there. Okay, let's look at the weekly. Yeah, we can see right here the weekly can give us some clue. Let's see what is the high of this candle. 57.88. $57.88. Do we see anything up there? Not yes. We assume, yeah, maybe right here, right? This is a order block, right? Let's say what is the glow of this candle. Glow of this candle is 52.92. All right, 52.92. So 52.92. $52.92. That right? So we see that that's the reason why. Okay. So when we look at here, we see that a liquidity there. That's the reason why it keep going up and grab that liquidity. So that's the reason it needs to go up to grab the liquidity. However, if it did not go up to this level, which is 57, it only go above this one. So you can see that. Oh, sorry. The whole thing right here, you can put right here is a so-called resistance, right? You can say at a resistance or supply zone right there. If you want to speak the language of supply and demand, or spot as resistance, a typical spot resistance, then that is the resistance right there. But hold on, let me make it a little bit up here so you can see. Okay, so now we have that high time frame level, or in the ICT concept is called BD, high time frame BD array, right? That's the fancy word right there. All right. So for ICT language, concept, right, is called high time frame BD price delivery array, right? It can be a what? It can be a order block, breaker block, yep, something that accesses, you know. But if you speak a language of, you know, traditional retail, then it's called sport and resistance, right? And if you want to speak another version or derivative from, you know, traditional retail, is so-called supply and demand model. Okay, right there. So that basic, you know, the idea right there. The common denominator from these three concepts is the same. I mean, it's a area where, you know, the point of interest. Okay, so the area or the location that we really want to interest to see how the price react. So it's the point of interest right there, right? They call point of interest. Basically, they are point of interest. So, but you use different language. Depend on your model. So this is the area that we're interested to see. So on Monday we come up with this scenario, but we failed to point out this area, the so-called high time frame PD arrays or supply and demand level. That's the reason why we come up with it. But if we identify this on Monday, then we have to come up with second scenario, which is go long, and the buy side security is just a trap for a short setup, and it keep it a clue right here. When you pay attention at this order block, this bearish order block, and this bullish order block, right? So in order for it to go lower, then you have to break away from this bearish order block, but it did not. And it did not. So that's why it's critical right here. We pay attention to this. When we see that, and it tried one, two, twice, especially the second time it make a higher low. That means it did not take out liquidity from this guy right here. So I believe next week when it try, it will take out this liquidity right here. Okay, that's the second interval for now. We learned the lesson here. However, we need to fix our, we have roughly ideas for it to go down, but I think in order for it to go down, I think exactly it have to go in here. When it start, it have to break through this, let's say right here. It have to break through this bearish breaker with a fair value gap, and then it will go up there and retest right there, and then it's coming down like that. So that's more accurate description on the scenario. But then we have to come up with second scenario, which is the one for go long. And for that, the market show us, on Tuesday. I mean, by the way, on Tuesday, Wednesday, and Thursday, we are out. We not do any trading. We out. That's the reason why I pick up from what we left on Monday, and update will be right there. So it will be what? It will fake. It will take out the buy side liquidity, and it create a set of so-called fail breakout. Right? It's supposed to go down after it checked, but it fell. And how it fell? It fell to what? To move away from this order block. You see, it fell to move away from the order block. Right? It just, you see, barely right there. So I think this 1030 is a very critical order block right there. So it failed to break all this order block right there. It failed to close it, so you can entry from here. You can put your entry from here and your stop loss from this bullish order block right there. So this is a very critical order block right there. So our second scenario is that it will, second scenario is go here, and then it's retest order block. Right, it failed to break to that order block, and it will go up into this supply or high time frame video right there. Right, let me give it a different color right there, bullish. So let's make it go green. How about that? Make it look better. Yeah, let's give it green. Okay, so that's our bullish scenario right there, and it does really what happened. So we learn from the markets, right? Markets tell us the second scenario that we did not learn that before, so that's a good lesson right there. So we need to log this so we can learn from you know, of next time we'll do better. So it's at 10. So what the hour after this is 10. Friday. So basically on Monday it check out the buy side liquidity of Friday and make a retracement around the bullish order block and go up. Okay, that's go up to check more buy side liquidity right there. That's what happened. Okay, let's take a screenshot of this. What you call this setup? Or we call this what we call them right here. It is gives you some idea right here. Can we call this a breaker? See any fair value gap? Or we can call this order block. Okay, I think it's a very special setup right here. Let's consider this order block. So it's going to be order block. It's a new setup for us right there. And then you have sell side liquidity taken, right? And then people gonna go long. So sell liquidity taken. You see that? You will go long. Then right here is do buy side liquidity taken. And then that retest, that's auto block again. Normally we have auto block, fair gap, retest, and in this case we have this called auto block, buy side liquidity taken or push, and then sell side liquidity rated. And then it go back to retest that auto block again. Then it go up. That's the language right there. That's a model right there. And in this case is a long setup, right? We have another word for this. It's called fail breakdown, which is exactly right here. Right, we thought it's gonna break down, but it fell. It's not gonna break down. It's just a retracement and it go up. And how about this scenario? This scenario is gonna be a basic scenario, right? It's an auto, not auto block, it's breaker, right? And look at fair value gap, retest, and it's gonna be a short setup, right, for this one, because it's gonna be retest this bearish breaker right there for us. So this scenario is much easier for it to execute, and it's intuitive, and that's what, you know, so-called lots of people trap on this, right? Because they thought this, you know, we are the same. We thought this scenario gonna play out, but when it went down, we're gonna short them, but we have to make sure it went down, really break down this bearish breaker. If not fail to break down this bearish breaker, then go long. Understand? So let's check this screenshot. Okay. All right. Take this screenshot. And log into our database. Right there. Yeah, that's the very first thing I want to point out. And we have about 9 minutes left, so let's go back to do some commentary on the trade we took today. So the trade we took today, it fall into our rule of engagement, right? Here's our rule right now. Our rule right now. Very first rule, just one trade. Remember, one trade per week. And the day we're gonna take the trade of Thursday or Friday only for now. All right. Second trade, buy salary liquidity push when going short. Or sell side liquidity. Sell side liquidity push when going long. So that's our rule right now. And let's take a look. That's our basic rule engagement right now, right there for now. And the two basic setup that we are engaged is either order block fair value gap. That's what we're looking for right now. Or breaker, go with fair value gap. That's our setup we're looking for. So that's basics is our engagement right there, our rule right now. Okay, let's go back at the trade we're taking this morning. So the trade we take this morning, see if, all right, look at 1 hour. We see that the buy sell were taken, and it create a bearish breaker block right there, and it go up to retest that, and it create, you see, fair value gap right there. So the setup gonna be breaker, fair value gap, retest, then we're gonna enter when it retests this, you know, bearish breaker, and that's exactly what we do. However, we see another thing that another confirmation for it is it give a strong conviction right here is that It also take out the buy-side liquidity from the previous candle or previous hour right there. So that gives a extra, evident or extra confluence right there. So it take out that way, then we can engage short right there. However, we need to work on when we take the trade, we didn't come up with the targets. We only come to after we take the trade. But if you think that you see right here, and this auto block, and there's also an auto block, that gives you an idea that when it go up here, it's gonna retest this auto block, gonna come down, visit there, and that exactly happened right there. So that will help us next time to identify our targets. So this morning, our entry is perfect. We entry at this right here, 39, right? It's the best we enter right here, okay? However, if not, then this is the bad trade here, right? You know that it's gonna go back and retest this auto block on 1 minute time frame. Then you put our entry right here, and I'll stop right there. Then give it a good entry there. Yep, good entry there at 39. And then we are axis exactly at down close candle. So perfect. I would love to enter a short position on up close and X6 the short position on the down close, so we can have the best right there. However, it is not always perfect right. We're still working on our system, and remember, we are trying to build our system. Right now we're still building, right? We still discover what the best setup for us. So we still we're still building, we're still learning. Just be patient with ourselves and give our time. We can build a very unstoppable trading system right there. And remember, from my set perspective, there's no failure in our system. Only feedback. Only have feedback. If you receive feedback, then try to improve your system according to the feedback we receive. Feedback. There's no failure, no mistake. It's just a feedback, so we can remove completely, our emotion from our trading system. Just imagine you build an application, right? And then you test the data, you put the data, and it gives you the feedback. You improve that application. Does that application get, fail? It feel like it fail, or it feel like it's frustrated? No, it's just coding, right? It have no feeling. You can keep improve your feedback loop and end up like eventually the application will work better for sure. There's no doubt about that. So we apply the same concept to our system right here. There's no failure in our system, only feedback. And the more we loop the feedback, the better system gonna be. So the same right here. We need to remove the emotion from our trading system right there. So that is our entry right here, and this is entry right here, and then we access right here. But you understand right here, today is a beautiful and bright action. You know why? Because it gives you so many clues. Right here, right? It go up here. It retests this bearish breaker, and when it do the first time, you know they're gonna fail. You go short right here, and you know that you're gonna revisit this order block. If we check this order block, and you know that you're gonna short on a pullback, but it did not check it. That means it's gonna go up and check this guy. So right here, it go up here. Don't go long yet. Just wait for a retracement, and then going. And you see, if we check out liquidity, buy side liquidity right there, it check out one more time buy side liquidity, and it start going down. You see, it hit this order block right there, and when it hit that order block, and also 9:30 open, it gone down. You see, it gone down. It take the liquidity from this guy. It take the sell side liquidity. Oh, sorry, it is the wrong one. Is that the right one? Where's that come from? No, we don't want this one. So right here, it take the buy side liquidity from here, but it did not take the buy side liquidity. So you anticipate that it's gonna take this buy side liquidity. Okay, so when it retests this order block, you see Federal Gap order block, then you're gonna go short right here, and your target gonna be this liquidity right here, low right here. It did. It go below that, but remember, it did not take liquidity from here. Okay, you see that? So you gonna see that it gonna take the liquidity later. But here to give you a clue, right? When you exit the long, when it check out liquidity, then you need to enter the long position. What's gonna be your target? It's gonna be the buy side liquidity. And when the buy side liquidity was taken, it's gonna retest one more time. Beautiful right here. You see the order block, Federal Gap, and it retests that order block right here. You can enter that there. And what's your target? Your target is gonna be the sell side liquidity from this guy. Exactly that what happened. You see right there, it take out the sell side liquidity. That's beautiful in price action for today. So today is the best price action for Friday I haven't seen for a long time. It gives you a lot of trade there, short, long, and short, long, so you can make as much trades you want. All right, I think that's it for tonight, and I'm positive that you will get some benefit from this review. Talk to you later. Bye for now.